Now we're fortunate enough to be with someone who really examines the entire world from an investment perspective, and that's all the more reason why we want to find out why today he's interested in China. His name is Juan Ramon Zarco. Juan, thanks for being with us. You are the managing director of Magellan International.
Yes.
We really do appreciate you being with us. I think our audience knows full well the outstanding and long reputation of Magellan International, one of the most astute management companies in terms of investments around the world. Long history of doing so. You've made few mistakes as an organization. It tells us something when we see you here looking over China carefully. Let's give the audience your general perspective of China. Here we are in the year 2007. You're still very bullish on the way this economy is shaping up?
Well, I think that there's a lot of investments being focused on technology and other items that I feel that are somewhat exhausted, somewhat stale. I'm looking more in terms of an economy that's having a growing middle consumer class, and those where the investments will be prime. One example is hotels, real estate, consumer goods, because I'm seeing that there's a fast-growing middle class. A typical example, I'm looking at comparison. You got 1.2 billion people. I was giving some advisory work to a hedge fund in New York, and you're seeing that almost half of them have cell phones. India, which has about 1 billion people, only 81 million have cell phones. So you see, in comparison, two very large economies where one, they can afford cell phones, and there's a fast-growing middle class. And I'm thinking that's where most of the investors should be focused on if I were an international investment into China.
Okay. And does it also tell you something about the, I know it's hard to make generalizations, but is the psychology of the Chinese people, you think, are their aspirations more intense to join the middle class, to be part of the global economy, and to raise their standard of living accordingly?
Yes. Well, as you recall, that I think they still have a small family policy. So they're trying to, obviously that's one way to artificially increase your GDP, keep your population growth pattern low, and therefore you have greater revenue per individual members of the society. And I'm seeing that, yes, they have a focus on trying to increase the what I call the middle class.
Okay.
They don't have that much of a structure that I've seen in other parts of the world. Let's say Latin America, where I find some difficulty in a fast-growing middle class. I'm seeing a middle class growing in India, but it's much slower in terms of patterns in comparison to China. Eurasia, which I just came back from, there is a fast-growing middle class, and most of the investors that I know who have very stellar qualities are focused on consumer goods there.
Okay. I also find it interesting, this unique perspective of yours where you're saying you're not going after what's been the fad and fancy for a lot of investment firms, which is seeking out, IT or some of the more exotic parts of the Chinese economy. You say you're looking more at what, low tech?
Low tech, real estate, consumer goods, washer dryers, equivalent of Best Buy or equivalent of Walmart in China, because I think there's will be fast-growing middle class hotel chains, even the high class or what I call the premier hotel systems, ski areas, etc.
Okay.
They make more sense to me. I think that right now a lot of technology is exhausted. Anybody who wants to make in startup technology companies in China have made their money very well. Typical example is Draper Fisher Jefferson. I know Tim Draper, and they're looking at different kinds of investments. And I agree. You got to reconsider the time frame you're going in, how stale is the economy, or where is it growing faster, and make a comparison between that region versus another region and see what's the best, I would call the best buys you can get out of the country, the best margins.
One other thing I'd like to ask you about before we let you go, and that is consumer credit. To buy things, we still see that the average family still is not making a whole lot of money if you break it out over this billion plus population. Therefore, they're going to need access to credit. We did hear some people at this conference today speaking about credit. Do you think there's going to be enough easy credit for people? So far, the Western banks that have entered this haven't been doing that well when it comes to offering credit. Is there an opportunity there?
I think it's going to take a while. I think it's going to take a while for the Chinese culture to accept credit. It's not part of their culture.
Because they save
You're
more
right.
than
They save more than they borrow. Interest rates have to be low. And they have to target the audience, consumer market, in that perspective.
Okay.
I think that you have a cultural bias toward credit in that part of the world. I think consumer goods I think they'll invest well, and I think a more sophisticated credit market will develop in the next 5 years.
All right. One other thing, because you're astute investors, and I know you really are savvy in terms of, you've seen the problems with corporate governance in parts of the world, corruption, all kinds of financial fraud. It's still a problem in China, and in some cases people could make the argument that it's still a growing problem, because as China's incorporating all these issues of credit and finance and even the capital markets, we're seeing a lot of that. How does a firm like yours cope with that when you're trying to nitpick and choose the very industries and companies that you think can do well?
Well,
do you
several
insist
ways.
on certain things?
Yeah, well, you face that in many parts of the world, including the U.S. with the stock option problem we had, advanced stock options being granted.
Good point.
But I've seen it in Russia, and I had that discussion with investors in Russia. You have to create a portal. I mean, most places that I've seen in parts of the world, what I mean by portal, most of these countries, whether it be China, Eurasia, or India, don't have the sophisticated corporate governance rules. But there are offshore entities that you identified in which they already have them in place. So you create what I call a third party or proxy corporate governance. And in order for me to do an investment in Russia, that's what I have to do. And I have to build a company in Cyprus. And in China, it's a totally different kind of island, Macau, whichever. And that's one way you start to deal with one risk factor, how to mitigate that factor. How do I control that foreign Chinese company? What portal will I use? The other way that I try to avoid that risk, you always have a reliable, stable partner in that country. I don't believe anybody can make an investment, private equity or otherwise, in a foreign country without having a partner that you can rely on in that foreign country.
Interesting point.
Because you cannot either participate in observation in corporate governance month by month. It's very difficult. You have a language issue. You have a cultural issue. But if you have a strong investment partner, like one of the people I spoke to in Moscow was Alpha, or you can speak in China, one of the other major banks, you have confidence that they're observing your investment as well.
Okay.
And they can communicate with them. They become your third party. So you have two ways of controlling it. One, creating a third party company, because I'm discovering that it doesn't matter what part of the world I go to, Latin America, India, whatever, I have to create a third company somewhere in order to have control over the corporate governance issues for that foreign-based country in the mainland, whether it be mainland China. And I also have to look at some financial partner. I do not recommend to anybody, in the private equity side, making a solo investment in a foreign country.
Okay.
It's just too risky.
It's good sound advice. Finally, then, where would you say China ranks, let's say relative to a Russia, Latin America, India, where do you think China ranks in terms of that issue of corporate corruption and your concerns in that area?
I think that right now China is getting better at it, but I think you still need those connections. I don't think it's the word, it's like we rely so many on lawyers in the United States to tell us what the rules are. You go to China, the rules just don't really exist. Yeah. It's all about relationships. And if you have the right relationship, it works. If you don't have the right relationship, it will not work. Okay. So I would consider China to be up there. I think Russia is cleaning up, but I think in third or fourth. Latin America will always be the same for the next 100 years. I think that the issue of corruption, I've had friends who make investments in South America, and I'm finding out that they still don't know what a board meeting is all about when they make an investment in there. And I'm seeing, well, wait a minute, they've been around for 100 years. Yeah. And then you're thinking that there is a certain level of corruption. But again, even in those countries, it pays to have a relationship with a family or important economic presence in that foreign country, even in Latin America. But I consider China to be substantially better. And I think it's represented by a growing fast middle class. Okay.
Juan Ramon Zarco, Managing Director of Magellan International. I can't thank you enough for sharing your views with us, because with the truly worldwide perspective you bring, it says something to us in your examination of China.